This is your technical update from the LMAX Exchange Research and Analytics Desk for Thursday, June 25th, 2015. Euro dollar. So the euro setbacks have been very well supported for now on dips below 112, with the market now needing to take out key support at 110.50 to confirm a potential bearish resumption and accelerate declines back towards next key support at 108.19. This support level is important because it guards against the critical multi-year and 2015 low further down at 104.62. At this point, a break back above 114.67 would be required to take the pressure off the downside in the euro. Sterling dollar. So cable has done a good job of pulling back from recent 2015 highs, with the market now focused on potentially retesting critical previous resistance now turned support in the 155.50 area. At this point, the constructive outlook remains intact, while only a close back below 155.50 would take the pressure off the top side and accelerate declines. Until then, the market will be focused on potentially putting in a higher low ahead of the next major upside extension beyond the recent 2015 highs at 159.30 and towards psychological barriers at 160 further up. Dollar yen. So dollar yen has entered a period of consolidation following fresh multi-year highs several days back at 125.85, and the market now looks like it could be poised for deeper setbacks within this consolidation, potentially back towards previous resistance turn support at 122. Any setback should, however, be very well supported in the 122 area, with the market looking for a medium-term higher low ahead of a bullish resumption back towards and eventually above that recent multi-year high at 125.85 and towards 130 further up. Euro Swiss. So Euro Swiss looks like it's in the process of putting in some sort of a base, with the market now being well supported on dips at 104, where a higher low is sought out ahead of the next major upside extension back above recent highs at 105.75. A break above 105.75 would expose the February peak at 108.15 further up. At this point, only a close below 104 would take the pressure off the top side in Euro Swiss. Aussie dollar. So despite this recent consolidation in Aussie dollar over the past several days, the market remains confined to a broader downtrend, and deeper setbacks are seen below the multi-year low that was established earlier this year at 75.33. Look for any rallies to be very well capped ahead of recent resistance at 78.49, while only a close back above 80 would really compromise the immediate bearish outlook. A break back below 75.33 would open the next major downside extension in this market towards the psychological barrier at 70 further down. Dollar CAD. So dollar CAD is doing a good job of being well supported on dips, with recent setbacks now looking like they want to put in a higher low in the 121.30 area ahead of the next major upside extension. Look for a break back above recent highs that we saw at 25.63 to confirm the bullish outlook and accelerate gains back towards a retest of the 2015 high further up at 128.35. At this point, only a break and close back below the recent low that we saw down at 121.27 would compromise the bullish outlook. Kiwi dollar. So Kiwi remains locked to within a well-defined downtrend after breaking this week to fresh 2015 lows. Ultimately here, the picture is very bearish, and the market should trade lower towards the next measured move downside extension in the 65 area. At this point, daily studies are a little bit oversold, so we're seeing a correction into Thursday trade. But any rally should be very well capped into the 70 area, while ultimately only back above 72.32 would take the immediate pressure off the downside. SPX 500. So the S&P 500 had put in a record high back in May and has since been well supported on dips, trading back up toward 2137. At the same time, rallies above 2100 continue to be very well capped, and the market continues to stall out ahead of that May 2137 record high. So look for the potential formation of a top in the works now, with a breakback below 2100 and then eventually a breakback below 2040 to confirm this outlook and accelerate declines. Really, at this point, only a close back above 2137 and fresh record highs would negate the topish outlook and open the door for a fresh upside extension in this market. Gold. So gold has seen some setbacks in recent trade, although the market is now back into critical internal support in the 1170 area. At this point, only break and close below 1170 would compromise the immediate constructive outlook for gold and put the pressure back on the downside towards the critical 2014 base at 1131 further down. If the market can hold, however, above 1170 on a close basis, it keeps the recovery basing outlook intact and opens the door for fresh upside back above recent highs in the 1206 area and towards 1232 further up. The market will need to take out 1232 to really confirm this outlook and accelerate gains back above 1300. But again, for now, keep an eye on the 1170 area and to see whether the market can hold above this level on a daily close basis as it has done in recent trade.